Hey, what's up, everybody? This is the David Greene Show. I'm David Greene, and we are Real Talk Real Estate. Going live today with a little announcement about the direction of mortgage rates. So this is one of everybody's favorite topics. If you're not already doing so, make sure you go subscribe to the David Greene Show on Apple Podcasts or Spotify. Every single week, we put out 3 shows. Mondays, we do a mortgage industry update. Wednesdays, we do a Real Talk Realtor episode for real estate agents. And then Thursdays, we do the David Greene Show, which is usually me with the real estate investor sharing information about rental properties or answering listener questions. You can submit those at davidgreen24.com/ask. Enough about that. Today, we're going to be talking about interest rates, where they are, where they're headed, what the heck is going on in the industry right now. Let me know in the comments, if you're listening to this, what your concerns are when it comes to this tariff war and where real estate interest rates could be headed, because it's probably not good. That's what we're going to get into here. People have been hoping they go down. President Trump has said he wants them to go down. Yet in spite of that, there are other countries that do not have America's best interests at heart economically that want to see the opposite happen. So in this chess game that we're kind of in with other countries, including China, we're going to be talking about what could benefit us, what we can expect, and then frankly, if right now is a good time to refinance for you, if you should wait, what you should expect to see with the market, how long are things going to kind of stay frozen, and when are things going to loosen up again? So before we get into it here, Real George says, thank you for everything you are doing. Thank you for that, Real George. Trying to go live every day right now. If you guys like these news updates, but maybe you're at work, you can't always check out what's going on YouTube, or you just don't have the time and you want the headlines and the blurbs, check out realtalkrealestate.com/textletter, where you can subscribe to a free weekly text letter called Behind the Shine, where I put relevant news articles affecting the world of real estate, updated mortgage interest rates, all kinds of good free stuff in there. My property management company also has a short-term rental property of the week that we feature with discounts for those that follow the show. Hope you guys like that. Also, check out my new book, Better Than Cash Flow, The 10 Ways You Make Money in Real Estate, available now in paperback and on Kindle on Amazon. All right, let's get to our first video about the future of treasuries and its impact on the mortgage market.
China is selling off U.S. Treasury bonds.
The nuclear option, that is, selling U.S. treasuries, U.S. bonds.
Beijing striking back today with a 125% tariff on all U.S. goods sold in China. This comes after President Trump placed a 145% tariff on Chinese imports.
And what I learned this week is that the most important thing to look at right now is not the stock market, it's the bond market and their interest rates. Now, right now, the yields on what's called the 10-year Treasury are going up. And that's because when countries like China start to sell off U.S. debt, which are their treasury bonds, it creates a ripple effect that hits everyone, which means to get new investors to buy U.S. debt, interest rates have to go up, not down. So I want to help explain exactly what's going on, because this might actually be part of a strategy not to crash the markets, but to corner China, the same way we cornered the British pound in the 1990s. And once you see it, it's going to explain everything that's happening today and how it's going to affect your 401ks, rising mortgage rates, all the way to the emergency Federal Reserve rate cut. So let me break this all down and explain exactly what's going on, and I'm going to show you what I'm personally doing with my money. So let's get into it. Hi, my name is Andre Jick. Hope you're doing well. Come for the finance and stay for the 401k Hunger Games. I used to have a 401k, now it's a 0k. So this video is about to get insanely complicated really fast, but if you stick with me, I promise it'll make sense. And if you get through it all the way and you understand it, you're a nerd and I appreciate you. So here's what just happened. In early April 2025, something happened to the bond market that usually never happens, which was the sell-off of US Treasuries. By the way, whenever you hear me say treasuries or bonds, they're the same thing. I'm using them interchangeably. Now, the most important one of these treasuries is the 10-year Treasury bond and its interest rate. And the 10-year interest rate or yield went way up recently, which is completely the opposite of what we want to happen. And all signs point to China and Japan. Investors believe that right now, foreign countries, especially Japan and China, which are the two biggest holders of U.S. debt, are dumping U.S. Treasury holdings as a way to fight back against President Trump's tariffs. And this isn't just coming out of nowhere.
All right, another thing to note here, we don't know that's why China's doing it. We're assuming their motives. My personal recommendation as you're listening to news, meeting new people, this comes up a lot in religious situations where people tell you, well, this is what this religious book says, and this is why. You don't always know the why. Sometimes you don't even know if what they're telling you is true about what they're saying. But we don't know why China's doing it. We just know China's doing it. So whenever somebody tells me the motive of somebody else, I don't ever take it at face value. They have to follow that up with their reasoning for why they believe that's the motive. If they don't give me an argument that would support why the motive of China would be to sell off treasuries to hurt our country, I don't take it as serious. Let's see if he actually gives an explanation for why he believes China is doing this to hurt the U.S. economy.
China's been slowly pulling out for years. In fact, by the end of 2024, they were already down to about $760 billion in U.S. debt, which is the lowest level since 2009. And all of this was started by just one move: tariffs. On April,
another thing to keep in mind whenever you're getting information like this, the part in the journey where someone starts the story is very important to consider. So if you've ever heard about like someone versus someone else, and they tell you the story and they say, can you believe that my husband said this? It was so rude and it hurt me so much. And they go on and on to tell you how terrible it was. They usually don't tell you what they did that made that happen. Okay. So yes, we are in this position with China, but we do need to acknowledge for a very long time, we did not produce anything in America. We just printed dollars and sold them to other countries in exchange for their goods. And the way we went on about doing that was by selling treasuries to companies like China. So they would buy our treasuries, and then we would use that money to buy their goods. So what happened is they made the money from selling the goods, and then they used that money to invest in our treasuries. They built a lot of wealth. We became poor, increasing our debt, which is why the debt ceiling is so big, by selling these treasuries. And we became less autonomous so that we could not produce our own goods, which made us more vulnerable. So for a long time, we're talking about like decades maybe, China has had the way more sustainable program, and we have not, which is why they are catching us as a world power, and something had to be done. When you just start the story with we're putting on tariffs and it's going to make things more expensive, it's easy to get upset. When you consider how much debt we've been taking on and the fact that we will eventually not be the world superpower if we continue this, it makes more sense why we're doing it.
April 9th, 2025, President Donald Trump hit China with 104% tariffs on all Chinese imports. China then responded immediately with a 50% retaliatory tariff on all U.S. goods. That raised China's total tariff on American imports to 84%. And if you think that's crazy, President Trump came back again and raised the U.S. tariff to 145%. And then China responded with their own 125%. All of this, by the way, happened in just 1 week. So it's no wonder the stock market just can't decide whether it wants to go up or down right now. But here's where it gets interesting. While President Trump raised the tariffs on China, he actually paused or lowered on a bunch of other countries. So now the pressure is on China. And what did China do? They didn't just raise the tariffs. They filed complaints with the WTO. They put restrictions on 18 American companies. They restricted exports of rare earth materials. And the biggest move, they started selling U.S. treasuries. That last one is the one that makes investors really scared. And that's because when China sells their treasuries, the bond prices fall, and that means our interest rates go up. But first, let me just explain why everyone is freaking out over the bond market and why it's so important. Now, the bond market is so important that it can control interest rates, it can control the central bank, the stock market, and even the president's actions. So let me just first explain how bonds control interest rates and the cost for us to borrow money. See, most people think that it's the central bank, the Federal Reserve, that sets our interest rates.
By the way, if you guys like this kind of information, I talk about it a lot on Mortgage Monday, coming out on YouTube every Monday. So subscribe to the channel. You get notified when it comes out, and make sure you subscribe to the podcast as well on Apple and Spotify.
But that's not completely true. The Fed controls short-term rates, like what's called the overnight lending rate between banks and the federal fund interest rate. But long-term rates, like the 10-year treasury, are controlled by the market, by buyers and sellers. Now, if countries like China are selling bonds, the Fed can't stop that overnight. So what happens then to interest rates when bonds get sold off? Their rates adjust upward. And that's because bond prices and their interest rates move in opposite directions. If the price of a bond drops, the yield goes up. So here's an example. Let's say a bond pays you $50 a year. If that bond was worth $1,000, that's a 5% yield. But if it drops to $900 and you still get $50 a year, you're now earning 5.5%. And that's what we mean when we say yields are going up. That means bond prices are dropping. And they're dropping because someone is selling. But now, imagine hundreds of billions of dollars of bonds being sold at the same time by China and by other foreign governments that are watching this play out. That forces US yields even higher. So interest rates go up, and that's exactly what we're seeing right now. And this is a big deal because higher yields make it more expensive for the US to borrow money. And with over $30 trillion in national debt, that's not good. And if interest rates get too high too fast, it can break parts of the US economy and force it to deleverage. And bond markets can also force the president to do exactly what he just did, to back off the tariffs for 90 days so we don't break even more parts of the US economy. That's how China is fighting back. It's dumping US treasuries, which forces interest rates upward and breaks part of the US economy. That's why the Fed might have no choice but to drop rates. And this is where I want to share with you a new theory about what's really happening. It involves this guy, Scott Bessent. He's President Trump's Secretary of the Treasury. Now, in the early 1990s, Scott Bessent, along with George Soros, broke the Bank of England. And here's how they did it. Back then, the UK was part of what's called the ERM, the exchange rate mechanism, which was a European agreement to keep currency values relatively stable against the Deutsche Mark.
There are going to be no devaluations, no leaving the ERM. We are absolutely committed to the ERM. That is our policy. It is at the center of our policy. We are going to maintain sterling's parity, and we will do whatever is necessary. And I hope there is no room for any doubt about that at all, that the government is determined to maintain our position.
The UK wanted to keep the pound within a specific price range, and to do that, they had to defend it by raising interest rates or using foreign reserves if needed. But there was a problem. The UK economy was weak, inflation was high, unemployment was going up, and most importantly, interest rates were already way too high for their economy to handle. So Scott Bessent and George Soros realized the UK couldn't keep it up. They believed the pound was overvalued, the UK couldn't defend itself forever, and eventually they'd be forced to make a choice. Either devalue the pound or leave the ERM. So here's what they did. They shorted the British pound. That means they borrowed pounds and sold them, betting that they could buy them back later for a lot cheaper. Some reports say they bought over $10 billion worth of shorts. But they coordinated this with other big institutions who saw the same opportunity. And when Bank of England tried to defend the pound by raising interest rates and buying pounds with their reserves, George Soros and Scott Bessent just kept selling into it. Eventually, the pressure was too much, and on September 16th, 1992, the UK withdrew from the ERM.
A unique day in London's financial markets ended with the Chancellor announcing that the pound was being suspended from the ERM and that the second of two dramatic interest rate rises during the day was after all cancelled.
Today has been an extremely difficult and turbulent day.
The pound crashed, and that day became known as Black Wednesday. And George Soros made over $1 billion on this trade. And Scott Bessent was the key architect behind how it happened. So the question is, how does all of this relate to China and what's happening right now? And why this all relates is because Scott Bessent is recreating a situation where a country is forced to make one of two very hard decisions. China is forced to choose between weakening their currency or defending the yuan. Now, if China weakens the yuan, that would be good because it would make exports cheaper and help offset the impact of President Trump's tariffs. But it could also trigger a panic inside of China because that would create inflation and investors might rush to move their money out of the country. It could make borrowing a lot more expensive and it could even destabilize China's entire financial system. It's called a flight of capital, which is money leaving that country and being invested into other foreign assets like gold, Bitcoin, and things like that. That's a very hard decision to make. Or there's option number two, which is what China's choosing to do instead right now. And that is to keep the yuan strong and to defend the value of their currency by selling their US dollar reserves to buy up the yuan. But to get to those dollars, they have to sell US Treasury bonds. And that's exactly what we're seeing right now. So from the outside, it looks like China is retaliating against the US, but they're also doing it to keep their own system from falling apart because they have to. The real question is, how long can China sustain defending its currency before they run out of dollars to support themselves? And China's looking at the US and thinking the exact same thing. How long can the US allow their bond market to be so high and to have this high interest rate before their own economy unwinds, goes into a recession, and they have to refinance $9 trillion worth of debt in 2020?
So this is how America painted ourselves into the corner with borrowing money, not producing. Kind of like the analogy here would be you didn't want to go to work, so you just kept borrowing money from someone else. And everyone was like, hey, you're being lazy. And you were like, don't you dare judge me. I have a right to live how I want to live. And there's nothing wrong with doing this. We got used to that. And that's why you see so many people just angry, like viciously hateful anger about the thought that things could be more expensive. It's going to force us to go get a job, which nobody really wants. We'd rather just vote for a politician that will give us free stuff than have to go use muscles we've never used and go get a job we haven't had. It's very difficult when you're not conditioned to waking up every day and doing something hard. Okay. But by taking on all the debt that we've taken on, we've given China leverage here. So he's making a good point. By selling treasuries that will force us to by them selling off their treasuries, it forces us to sell more, which we have to offer a higher interest rate on to get somebody to buy. And because the mortgage industry tracks the 10-year treasury note, when we have to pay a higher interest rate to get a buyer on these treasuries to be able to pay for the cost of running our country, it pushes our interest rates higher on loans. It pushes our interest rates higher on the cost of borrowing altogether. And we already have the problem right now in America, in my subjective opinion, that real estate's not moving because rates went up too fast and people don't want to sell their low rate and get a more expensive one. So our economy is kind of stuck. It really hurts our GDP when rates go up more than what they were before, significantly like this. So China's not dumb. They're over there like, okay, you want to tariff us so that we can't sell stuff? We're going to do something that's going to hurt you back because we have all your treasuries. Now, they should never be in the position to hurt us that way, except for this fact that we didn't produce our own stuff for so long. And we bought it from them with money that we borrowed from them. Can you see how foolish this is? If you owned a business and you decided you didn't want to go to work, so you borrowed money from the business next door and then used the money you borrowed from them to buy stuff that they made to sell in your store, you're slowly giving all control of your business over to that person. You're taking on a bunch of debt and eventually they own you, which is kind of what I believe President Trump saw happening with China. So we have to correct this. You can't keep doing it if you don't want China to take over as the world power. But that correction comes with pain. which is where you get a lot of political anger. You get a lot of people stomping their feet and protesting and just all of the display of emotions that we see because they don't want to go through the pain. And I don't think a lot of people understand what I just said. They don't understand that this is long overdue, right? If someone's like, hey, you're unhealthy, you're going to die, you got to go to the gym and you got to work out. Well, if you've been working out every day of your life, you're like, cool, see you there, bro, fist bump. Like, let's work out hard and let's spot each other. But what if you haven't worked out for 10 years, for 20 years? How much pain are you going to go be in when you go to the gym? You're going to kick, you're going to scream, you're going to claw, you're going to fight, you're going to shame, you're going to use bad language, you're going to defame, you're going to do everything you can to not have to go to the gym and exercise when you haven't done it for so long. You're addicted to like fast food or cheap food. You're not used to having to do the work to be healthy. And our economy is not healthy. There's ways we can measure it that look good, but that's because we're not looking at the debt that we continue to take on, the insane amount of debt we have. And if we borrowed all this money when rates were low, but China can push rates to go higher, we have to borrow money at higher rates, which means the interest debt that we now pay becomes even more. And that drives a country to bankruptcy. And when a country goes bankrupt, their currency loses value. When their currency loses its value and nobody wants it anymore, you can't buy stuff from other countries without massive inflation. And that's the part we should be worried about. That's our worst case scenario. Let's get back to this.
2025 at this super high interest rate. That's why there's a capital flight in the US as well. Money leaving the US stock market because investors are saying, we're just going to wait and see how this all plays out. Which means we're full circle. We're right back to the bond market. That's why yields are spiking, mortgage rates are going up, and why everyone is panicking about the debt again. It's a race against time for both countries. And in that sense, it's not helping anyone. So if this is really Scott Bessent's strategy, he's trying to engineer a situation where China's under so much pressure, every move they make just creates more problems with the goal that both countries come together to negotiate something more favorable for both of them. So the next big question is, what happens if China keeps selling US treasuries? And a few things could happen, and none of them are really good. First, US interest rates could go up, making mortgages, credit cards, and of course car loans a lot more expensive. So the Federal Reserve might have to step in and start buying US treasuries to stabilize the bond market. It's basically quantitative easing all over again, QE 2.0, and we've seen what happens when the Fed prints money. Any day now, we could see the Fed step in to do this. But the worst case scenario is a full-blown financial decoupling, where the US and China stop trusting each other's money completely. And that's how you get two separate economic systems or two world reserve currencies. Now,
all right, he is making a good point here, and I want to jump in and give a bit of a prediction. Let's just call it that. When we went through COVID and everyone was saying there's going to be blood in the streets, you got to sell everything you got to keep all your money, don't buy real estate. I was one of the few voices that said, no, it will be the opposite. We are printing so much money right now because, frankly, the federal government didn't want people to realize the negative effect it would have on the economy to shut down production for whatever it was, like 9 months. Like with shelter in place and you can't go to work. If they hadn't printed money, you would have had starving people rioting in the streets. They would have just went to work anyways, because you can't shut down all production for 9 months and not let people work and still have a country. They'll starve. So to trick us into thinking that it wasn't that big of a deal to shut down the whole country from the response of the federal government, they printed a whole bunch of money and passed it out to people to kind of like placate us. Okay. Just like numbed us with heroin for a while there. And that is what created the massive inflation. Part of what created the massive inflation we're struggling with right now, which is why everybody's upset. And I am not an economist, but I could see pretty obvious this is what's happening. And I was like, man, this is going to make prices for real estate go high, even though the value of the real estate didn't get more. The price of it did, because it took more dollars to buy it. That doesn't mean it's worth more. It just means your dollars are worth less, which is what inflation is, which is where we are today. Hope this is making sense to everybody who's listening here. what could happen in the future now, from what I'm seeing, is China's prideful. And if you're one of those people that just kind of errs on the side of human beings are inherently good, and we in America are Judeo-Christian society, we treat people the way we want to be treated. We're nice. They're going to be nice to us. If you're one of those people that looks at the world through that lens, this would be very confusing to you why we are taking a hard stance with China. If you're somebody that has traveled overseas and seen other countries' value systems, if you're ever in the military and you had to deal with death and war, if you worked in law enforcement like I did, you get a perspective that there are a lot of people in this world that don't treat others the way they want to be treated. That's not their value system. Their value system is, if you see weakness, you exploit it. If you see stupidity, you take advantage of it. And if somebody leaves something out, you take it. Okay. These are the people that will commit assault on young women. These are the people that will rob young men. Like, there are people who look at the world through this lens, and that the Chinese people themselves might be wonderful, nice people, but their government probably doesn't look at us like they want to help and support us. Okay. They want what we have. They want to be the dominant world order. They would love it if their currency was the reserve currency for the entire world, and they got to sit at the top spot, and they got to control all the things that America could control and often doesn't. I don't know that they would be the world's global law enforcement agency in as benevolent of a way as America tries to be, if you pick up what I'm getting at here. They're not going to be our friend. I don't think that they're going to come and negotiate with us. I think they're going to double, triple, and quadruple down on making things worse for us. Now, they may put on an air of negotiating to keep their own people from completely rioting, because these tariffs are not popular with the Chinese people. They don't like losing their jobs, which is what's happening. But I think it will be an air. I don't think that they're actually going to come play ball. And what I predict is going to happen, though I hope it doesn't, is you're going to see that certain countries come negotiate with America, and we have free trade with them. Other countries follow China's lead, okay? And they end up sort of like a line in the sand is drawn, and you got America and China, and then you have the allies of China. We're going to call these like the Axis powers, to use World War II terminology. And you got the allies of America. That this is not a war, this is trade. So you sort of get two separate divisions of a company, or so to speak, right? Where this area of the world trades with America and uses the dollar, and this area of the world trades with China, buys their goods, and trades in their currency more so, okay? And you'll see more and more deals grow between these two different factions that sort of divide the world. And some people will look at that and say, President Trump did this. That you have the right to look at it like that. Other people will look at this and say, this was already happening and Trump accelerated it. I don't think anyone can deny that. But it's sort of like this bully is getting bigger and bigger and stronger and stronger. And if you don't do something right away, they'll be so big that you can't stop them when they get there. Now, you might not think that. Everybody's going to form their own opinion. I'm sharing the perspective that I have. It could change as information comes out. I hope this doesn't happen, but I can see a very likely scenario where this is the first step towards lines being drawn with trade. And once that happens and animosity and hostility grows between the two sides, economic war can turn into actual like war over land and influence and people and resources. Okay. I don't think this is going to happen tomorrow, but I wouldn't be surprised if history looks back at this and sees this was one of the first steps in exposing that China was trying to take over the position that the U.S. had. When the U.S. said, no, you won't, China showed their true colors, their red communistic flag colors. And they said, oh, really? We won't? We'll see about that. We're going to get all our buddies together and we're going to take a stand against you. And America's like, well, I guess that's what we're doing. And that's how things shake out. Again, I hope that doesn't happen. I am not rooting for this. I'm not excited for this. I just think you got to be a realist. You got to accept that That makes all the sense in the world that things would go there. Now, what could stop that from happening is if China does come and say, all right, we'll drop all the tariffs on America. We'll stop taking advantage. We'll stop pretending to be your friend and stabbing you in the back. We'll stop doing things like what they were doing with the Panama Canal, right? That's a big thing where we built it and they took it over. If every time we turn our back and we don't look at what they're doing and we treat them like a friend because they're a trading partner, they're the friend that's slowly kind of like hitting on your girlfriend when you're not looking. They're the friend that's slowly starting to like siphon the energy off your house when you're not paying attention. They're taking your vacation time and using it as their own at work. And they call you their friend, but they're kind of your frenemy. Now, they're obviously making these moves that will probably have a significant effect on our interest rates, which we're going to get to in a minute when we finish up the video right now.
We're not there yet, but every move we make from here on out matters a lot. And the good news is that no one knows exactly how this ends, not even the people that are in charge. We are just making it up at this point. But here's what I do know, and here's what I'm doing with my money and how I'm investing. Right now, I'm staying invested. And as crazy as this gets, I'll keep doing the only thing I know how to do, which is to dollar cost average into the stock market and keep buying VTI, Vanguard's ETF, which is what I have been doing. I'll keep dollar cost averaging into Bitcoin. And on weeks like the one we just had, I'll buy a little bit of extra, which is what I just did at a discount. Then I'm immediately moving my Bitcoin out of the exchanges and onto cold storage. And if you want a step-by-step guide on how to do that yourself, I have a 4-hour training guide that shows you how to do that. You can use coupon code Andre40 to get an additional 40% off. And I'll keep trying to understand what the heck is going on along the way and sharing it with you. Because even though these videos are trying to understand the bigger picture here, I would never act on any of this. I'm never going to try to time the market or sell my stocks and wait for it to go back up. The point of all of this is to get the knowledge, because the knowledge is that mental power that will help you stay invested in the markets, especially when things get crazy. But I'd love to hear your thoughts. Let me know down below. I hope you have a wonderful rest of your day. Smash the like button. Subscribe if you haven't already. I'd love to see you back here next week. I'll see you soon.
All right. Let's look at a couple comments and then we will get to the next video. David, are you jumping into the stock market? Would love to hear your thoughts about buying stocks. I love real estate investing, but also hate dealing with tenants, and looks like stocks are on sale. Fitting question there, considering that his video ended with a pitch to go buy stocks. Remember I just told you guys, like, I feel pretty confident about certain predictions that I'll make. I'm also right here to tell you when I'm not that confident. I'm not that confident what I'm going to say. I don't think that we're going to see stocks rebound and go flying back up again. I think that there is a good chance that they'll get hit harder. I think that American companies are in for a bit of a shock. I don't know, but this is what it feels like when I look at the holistic picture of what's going on. You have companies like Nike that sell their goods because they're popular and cool. Everybody wants to be cool in America, which is kind of a function of having a ridiculous amount of wealth. You get bored. You don't have anything real to accomplish. You don't have to go shoot deer, protect yourself from warring tribes, chop down trees. What are you going to do? You increase your swag. You increase your drip. You start to worry about saying cool things like no cap instead of no lie. You get bored and you look for dumb things to make yourself feel valuable and dumb causes to fight for. And that's us. We haven't worked for a long time. We don't have people, like an entire nation of people getting up every day and working like they do in China. So we get obsessed with dumb things. And one of those things is our clothing. Like, just take a step back and objectively think about a Gucci purse, okay? You're going to go pay $5,000 for a purse that just says Gucci, 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 Gucci all over the purse. I honestly think that, like, the people that own Gucci and design it are laughing at the people that buy it. Like, this looks to me like when you were designing the purse, you said, I bet I can get someone to pay $5,000 for this purse. And all I'm going to do is take the brand name, hit Control-C, and then Control-V 50 times. I'm going to put zero effort into what I am doing. I'm going to be lazier than the guy that designed the Japanese flag. And I'm just going to make it say Prada, 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 a whole bunch of things, okay? Over and over and over. And they will buy it. And you know what? We do. We spend insane amounts of money on designer clothes. Now, I think that you're going to find American companies that have been charging incredibly high profit margins. And the Chinese companies that are making those goods are getting paid like not that much money. So it's not all the wealth is going to China, though a lot of it is. A lot of it is just in greedy American corporations that you pay way too much money for because money's cheap. We printed a bunch of it. We got nothing to spend it on. So we spend $250 on shoes or $5,000 on purses. It's insane. But this is what happens when money is cheap and we don't have to work hard. I think those companies are going to get exposed for taking advantage of American consumers badly. Okay. And they're going to have a massive, massive hit in their stock valuations. I can't tell you as an expert. I'm a real estate guy. I'm not a stock guy. I don't know what that does to the market as a whole. I don't know if Nike and Gucci and companies like that taking a hit, there's exposure in these other companies in the stock market. I don't know if these ones fall, if that makes these ones fall, or if they're sort of isolated and that doesn't happen. That's a question for a person that's maybe a stock expert. But I think that our stock market, what I'm getting at here, is probably going to fall further. I don't know they're going to crash, but I think it's going to kind of like level out or just slowly keep getting hit as it becomes obvious. Yeah, China's not sending us stuff. It's not cheap anymore. Other countries are, but we got to ramp up some production here. We got to get some plants going. We got to get people working in America. And that doesn't happen right away. So I would not be surprised if our economy actually gets worse before it gets better. That's normal. When you first go to the gym for the first time in 20 years, when you haven't worked out, you don't come back with a muscle. You come back with delayed onset muscle soreness and a hatred for life. You come back sore and miserable. You don't get endorphins pumping after the first workout. It's terrible. You got to consistently stick with it before you start to see the results, right? You guys see me like moving my shoulder around. It's bugging me again. It's bugging me since back in the bigger pockets days. I worked out today, so I'm an example of this. The stock market in this analogy could be how you feel. And it's not going to go up right away. It's going to take us some time to get things rolling. I think the administration is going to start offering credits, tax credits. They're going to maybe like increase the corporate tax rate, but then give you a credit if you open certain manufacturing plants. And they're going to move and they're going to put pressure through taxes on the labor force into manufacturing and away from the jobs that are going to be taken over by AI. So I would not be in a rush to buy stocks right now. Also, that being said, I'm not the stock guy, so I don't have the best answer, but no, I won't be buying them. Let's see. Raul said, but Bernie Sanders said we should be nice to people. That's a good one. Net worth. They said last week the rates were about to drop. That's probably before China started selling off their treasuries. Noah liked my mention of swag and drip. Danielle, this isn't quite right. The end result is correct in that interest rates are going to go up with treasuries being sold off, but we don't know yet who is selling off the treasuries. Stay tuned. We might have another video to talk about this in like a minute. In a market sell-off, hedge funds often sell safer assets first to cover calls on underperforming ones. China selling off treasuries hurts China because it raises the value of their currency. This is a point I have heard our treasury secretary make. And he said, look, if China sells off their treasuries to hurt us, where are they going to put the money? They got to put it somewhere. Otherwise, they flood their own market with a bunch of liquidity, which does hurt the value of their own currency. That's how this is how a trade war works, folks. Just like a divorce. You each got to hurt yourself to hurt the other person. The question isn't, does this hurt? The question is, who can endure longer? Because if you endure longer and you win, you get all the spoils. And then Darren says, Trump is getting a lot of businesses on board with investing here in the U.S. I believe he is referring to the investment that he has basically secured. Isn't it amazing to have a president that is not only a president, like a commander-in-chief, but he's actually negotiating himself to save Americans money? I don't know that maybe I'm naive, but I don't know that I've ever heard of it. I heard a story of Trump and Elon Musk talking about they negotiated the price of Air Force One and got it way like half of what they would have paid. And they were like, you got to have two things if you want to save money. You got to have a heart, you got to care, and you got to have a brain. You got to know what you're doing. If you're missing one of those, you won't save money. And he's like, the first step is just giving a crap. Do I care that we're paying twice what we need to get this airplane built? Well, yes, I do. The next step is, do you have a brain? And they gave the example of everybody gives a ridiculously high price first, and then they expect you to counter them. Well, no one counters them. Our government just goes, okay, we'll do it, and then gets a kickback on the side where they make themselves wealthy. That's how our politicians work. And Trump steps in, he's like, I'm not going to do it. That's insane to me that he's actually negotiating himself to get other countries to come invest in America to do manufacturing. You can hate the guy. I'm not here to say that you shouldn't. I'm not here to say he's perfect, but I can't think of the last time we had a president that cared enough about the economics of the country that they themselves were negotiating to try to do something that would improve our own economy. All right, short video here. Hang with me, guys, and I'll have you out of here soon.
Treasuries in Japan. In fact, they hold more U.S. Treasuries foreign holders than anybody else in the world. We've talked about how if they were to slow or stop or even sell their treasury holdings, they would shoot themselves in the foot. In this case, what is the risk that if pushed into a corner, they may actually do that?
Just think about it logically. If they were to sell their U.S. Treasury holdings, and remember, Ali, it's about probably $2 trillion worth that they own, and you're right, they and China and Japan have about the same. If they start to sell that, they're going to be selling dollar, bringing the money back to renminbi. That's going to push the renminbi up. So if their main policy is going to be to try and allow the renminbi to depreciate, they don't want to be doing that. I think Japan is actually the bigger problem, and I don't think China was selling for exactly the reason I explained over the last couple of weeks, US Treasuries. And it's all very well for the Japanese government to say, we're not going to sell US Treasuries, but it's not the Japanese government that owns them. It's Nippon Life. It's the GPIF, the Government Pension Investment Fund, which is an independent body. The government can tell them don't sell, but if they decide for economic reasons, they are worried about their exposure to the US. They're worried about all this policy randomness and lack of breakdown in the rule of order in the US. We want to reduce our exposure. Not a lot the government can do about that, frankly.
China right now holds more U.S. Treasuries than Japan. In fact, they hold more U.S. Treasuries foreign holders than anybody else in the world. We've talked about how if they were to slow or stop or even sell their treasury holdings, they would shoot themselves in the foot. In this case, what is the risk that if pushed into a corner?
All right, folks, there you go. We just talked about this. In order for the countries that are currently trade partners to hurt us, they have to hurt themselves. Same position we're in America. In order for us to hurt another person like China by putting tariffs on them, we have to hurt ourselves by making things more expensive. I'm going to end with this little monologue here. This is the way. This is how the world works, as the Mandalorian would say. This is the way. You can't have both. You can't have an incredibly high debt amount that you have to keep pushing the debt ceiling on and keep taking on risk and possibly bankrupting an entire country and have it go forever. You can't try to get healthy without feeling some pain first. And I will also say, when I was a psychology major, one of the things we learned was about ways to affect behavior. Negative reinforcement was even stronger than positive reinforcement. It's the strongest motivator that psychology knows of. And it's defined as removing adverse stimuli in order to create the behavior that you want. So if you give a rat a pellet, if it steps on a certain square that it gets to eat, that'll motivate it. But it will be much more likely to do what you want it to do if you don't offer it a pellet, but instead there's a shock, and the only way to make the shock stop is to step on the square. You can, if you offer someone money, you can motivate them. If somebody's freezing or starving and you offer them warmth or food, they will be very motivated to do what you want. Pain is not always bad. I would like each of you to look back at your lives and tell me what motivated you to turn a corner or make change that was due. It's usually when you were in so much pain, you felt like you had no other option and that you were very motivated to step out and do something new. Our country is entering into an era like that. Pain is coming. Pain can paralyze you. It can make you negative and bitter. It can turn you into an angry, hateful person that just rants all over social media, or pain can make you better. Pain can motivate you in ways that you weren't moving before. Pain can put you on the path towards excellence that will actually lead to a better life and empowering you. Our country is taking the journey. My question is, are you going to take it too? Are you going with the country, with the wave, with the momentum to be a part of something incredible? Or are you going to fight against it to make some point that not everybody really cares about. You're probably just going to hurt yourself if you don't move with the new direction. My advice to everyone, because I don't want you to feel any more pain than you have to, is to ask what's in your best interest, what's in everyone's best interest, and move in that direction. Thank you guys for being here on the channel. Thank you for following. Again, please make sure you subscribe to the show right now. Get notifications when I go live. You can also follow me on Instagram at DavidGreene24. You can DM me the word faith there if you're interested in learning about my faith-based mastermind for those that want a closer relationship with God and are ready to prioritize that in their life. And you can also sign up for the text letter at realtalkrealestate.com/text-letter. Keep an eye out, and I'll see you guys on the next one.